What's up, everyone? It's Scotty with MoneyVest. So in this video, I wanted to give you an update on Rivian, ticker symbol RIVN. It's been down over 22% from its highs recently. Of course, on the day it was down 22% from its highs. It's obviously down from its recent highs. It's down a little bit over 35%, and of course, from its all-time highs of well over $180 a share, the stock remains down close to 90%. Now, I'll go over the delivery numbers and I'll go over and explain you guys why it was down because of that convertible note offering, which, yes, on a surface, it seems like a negative catalyst and, there's a level of share dilution in the future. But I'll go over the terms of that convertible note because it actually does sound like a pretty good deal for Rivian. And more importantly, the investors that are actually going to be buying this bond are actually expecting Rivian to do well in the future in the next 7 to 8 years, and I'll go over that in this video. So as always, if you enjoyed, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the market updates, members only private videos, our analysis, our research, our buy and sell alerts, our Discord channels. Everything's going to be included, as well as the individual stock reports and the Excel spreadsheets that you can also use and download. So link's going to be down below, and we'd love to have you on board. So this right here was the delivery numbers. So Rivian remains on target after third quarter deliveries beat expectations. So they reported those numbers earlier in the week, and they are on target to reporting 52,000 vehicle deliveries by the year end. And the increase was about 16.5% on a production basis and 23% on deliveries. And these were on a quarter-over-quarter basis. Of course, year-over-year was also very, very nice growth. And the third quarter saw a total of 16,304 vehicles were produced at its manufacturing facility, while 15,564 vehicles were delivered to customers during that same period as well. Rivian said that, quote, it believes it's on track to deliver on the previously upgraded guidance of 52,000 units for the year, helped by the easing of supply chain and the bottlenecks as well. But of course, the company's not profitable yet, right? So we've got massive amounts of losses also mounting. We know that Amazon is also part owner in Rivian, which is also going to be affecting their earnings per share every time the stock goes up or down in any specific quarter, because they have to, again, account for that on a gap adjusted basis into their earnings. And this right here has been the overall stock price, down over almost 90% from its lows, though it is still higher from about April, rallied over 138%, still up 54% from its lows. Year to date, the stock price is down about 3.3%, so it hasn't really moved all that much. And of course, yesterday's sell-off on high volume, 22.8% on this catalyst, where Rivian is pricing in a $1.5 billion green convertible senior note offering, which obviously when it came out on the surface, it does look like share dilution. There's going to be a lot of issuance of shares, and this is not great news. The company's raising capital, and yes, all of that is true. There's potential for future share dilution because the way convertible senior notes offering work is that they are a bond, right? They are a bond with the contingency to be converted into a equity ownership in the future at certain terms and certain trigger prices, which I'll go over in this video. But it is at the end of the day, it is a level of debt that the company's taking on, while also giving these bondholders the option to convert it into equity, which could lead to potential share dilution. There's always a level of share dilution element of that with convertible senior notes. Of course, the company is doing straight up bond offerings, corporate debt. They are not going to be converted into equity. If they're doing simple equity issuance and raising capital through equity issuance, that's amount of share dilution. But convertible notes are a hybrid, right? They combine both of them together. And this is going to be priced at around $23.29 price per share of a common stock. And right now, of course, at the time when this came out, it was trading at around $21, right? Before the market opened, it was at around $21.39. So it wasn't that far off from where these bonds could be converted into equity. Now, one more thing I want to point out is that this is actually not a bad deal for Rivian. And the reason I say this is because if you take a look at the terms of this bond, 3.625 interest rate is what they are paying, and they are due in 2030. So we've got Rivian's got about 7, maybe 6 years of financing at an interest rate of 3.625. And that interest rate's obviously a lot lower than, where the interest rates right now are. Like, we're at over 5%. Even considering, I think it's probably because of the backing of Amazon that they have, that they're able to get such financing. But most corporate debt, most notes that we've been looking at are over 4.5, 5%, at least 6%, especially if you get into the junk bond category, which Rivian, I'm surprised, wasn't considered as a less credit-worthy borrower because of their financial position. So 3.625% is actually a pretty good rate that they're able to capitalize on, and that's $1.5 billion is what they're getting of proceeds, and that's going to be due in 2030. So bottom line is that's actually a pretty good rate. I mean, we know where interest rates are, we know where they've been trending, and they've been just going higher. That's even lower than where inflation is right now. So whoever is going to be buying at 3.625% of these corporate debt is not really concerned about the interest rate. They're concerned about the opportunity to convert it into equity over the next 6 years at a lower valuation, because they actually believe the price is going to be much higher than where it is trading at the moment. That's what I want you guys to understand, because look, as a buyer, if I were given the opportunity to buy convertible notes from Rivian at 3.625%, heck no, right? You can get the 10-year treasuries, you can get the 7-year treasuries, you can get the 2-year treasuries at 5.5%, close to 6%, right? So why would rational investors in their right mind pay Rivian this money to buy a 3.625% note due in 2030, right? Only the people that believe that Rivian is going to be worth more in 2030, right? Because the price is going to move substantially higher, and that's going to give them the opportunity to convert their bond into equity at a significantly lower valuation and take advantage of that capital gain as they expect the price to move up. And the ratio is somewhere mentioned here. So that's, again, the premium. The conversion price represents a premium of around 27.5% from Thursday's closing price of $18.27. Of course, on this news, the price obviously dropped, and the initial conversion rate would be a 43.929. So basically, each bond will give them 43.929 shares of common stock per $1,000 principal amounts of notes. So $1,000 is the face value of the bond itself, and that's going to give them just under 44 shares per bond at a premium of about, right now it's a premium because the price is obviously lower. If it was higher, then it would have been trading at a discount, but right now it's $23.29. So that's where we are at the moment, and this is actually a pretty good deal, not gonna lie, for Rivian from a financing standpoint, because had they gone to a regular bank to get debt, or they would have gone with equity, obviously that would have been a straight share dilution, and had they gone with just a regular course of equity debt issuance, they would have not got this rate. I think the reason why they're able to get this is because convertible notes give the investors the opportunity to convert it into equity, and again, majority of them are willing to get this return because of the possibility to convert it into a higher equity sort of evaluation perspective. They expect the price to go higher, and they can convert it into equity ownership, which obviously is going to dilute shareholders in the future. But I want you guys to also understand the consensus behind investors who are going to be buying this amount of debt. They do expect Rivian to actually do well in the future. I think Amazon's backing has something to do with the amount of the terms that they got. But this right here is going to be the technical breakdown, where obviously we are selling off quite aggressively. I would put down the next support at around 1561. So that right there, previous support level, resistance is going to be that level to watch. And right now we are still very much in the context of a little bit of a lower high and lower low pattern, where Rivian is obviously just trading inside this downtrending channel. Right now we're kind of sitting above that 200 simple moving average. And of course, if we do see some more selling pressure, some more potential downside, the next support is going to be 1561. As I mentioned, is going to be that next level to watch. Rivian's still not profitable yet. So eventually, if and when they do turn profitability, then I will be very much interested in this company as well from a fundamental standpoint. But right now, I'm not interested at all. Maybe from a swing trade perspective, we can look at it from from a technical trading perspective at 1561, and then another support sitting all the way down to as low as 1256. But we're not there yet. A pretty significant sell-off. But I do think the market's going to realize the fact that investors are optimistic about Rivian over the long term. Why else would they be willing to accept a substantially lower rate of return compared to the treasuries? And that's only because it gives them the right to potentially exchange their bond to equity in the next 6 to 7 years after the trigger price is achieved. And they expect Rivian's price to be substantially higher than where the trigger price is going to be. So hope you guys enjoyed this video. Just wanted to give you a little bit of that clarification, and let me know your thoughts down in the comment section below. As always, enjoy this video, found it helpful. Make sure that you drop a like, subscribe to the channel. And let me know what you're doing with Rivian right now. Are you buying, selling, holding? What are your thoughts? As always, happy investing, and I'll see you all in the next video. Don't forget, link to our Discord is going to be down below. We'd love to have you on board.